From the floor of the CME Group, this is Danny Riley on this Tuesday, June 29th. We're going into the end of the quarter here, and it's not going out on a very pretty note, okay? That's the way it goes in this world. Things go up, things go down, and obviously the markets are in a downtrend now. You know, yesterday when we came out on the Mr. Top Step video, we explained that the market had to get above 77.5, 78 to go higher. It never did that. And we also said that if the market didn't do that and it started to sell off, that we would start to see the S&P under 1050. Well, guess what? The low of the day is 1038. And we nailed this thing right on the head. In the equity report, on our daily calls from the desk, we hit it all the way down. We let all our clients know exactly where the sell stops were. We explained about why the sell programs were so predominant. And we were also trying to explain what we've been trying to say for the last month or so since the market started to sell off. When you're doing program trading, when you're doing a sell program, you need a bigger, you need the market at a big discount. You know, you follow fair value, which is around $4 in the S&P spread. Well, it all comes into play. But you know, when the market starts, when the S&P starts to lose premium, and you have natural sellers going in, and you have sell stops, those bids get elected by those sell stops. It becomes a foregone conclusion, and that's what we're seeing here today. And what we've been trying to say is, when we have short covered lately, it's almost like they don't want to do a buy program. They get the premiums up high enough to do a buy program, but the only way that they can get those programs off is if a buyer steps in, or we have some buy stops that elect the offer side of that buy program to make it go up. It ain't happening. You know, somehow or another, whatever the power mechanics are doing at work, they've made it much easier to do these sell programs than they've done buy programs. Now, we came in with about 400,000 minis traded before the open and about 4.6 thousand big S&Ps. That's not really what we're looking at. We're looking at the minis, okay? The pit's we had fairly good volume today, but yesterday, like we said on the video, we thought there would be 9,000 or less big S&Ps traded yesterday. They only did 7,000 in the pit. Well, today already, they've got 9,000 or close to 10,000 traded, so it's a far better day than what they had yesterday. But as far as the minis, everything was going along fine. The Asia was down overnight hard. Hang Seng was down over 4%. That dark cloud went into Europe, and that dark cloud ended up here in Chicago, over the stock market in general. And you know what? It proceeded to continue down. And what this was all about was there were so many sell stops that were lined up underneath the market that there was no way that they couldn't go down. And once the natural sellers came in and we started electing those stops, it accelerated to the downside. But the real big thing here was the consumer confidence number. It came in way lower than expected. They were estimating that the number to come in at 62.8, and it came in at 52.9. That's a hellacious number. And immediately at the 9 o'clock number, when it went out, the S&Ps went into a flash down 5-6 handles without one uptick. And then it upticked a little bit, and then we gradually went down through these support levels, through the 41, through the 40 level, and into those stops under 40 even. Now, you know what? My daughter Isabella is starting today on the trading floor. It's a good way for us to keep track of her. But also, we're going to have Tim come in and give a little bit of the technical side on what he's seen. You know, we're going to tell you time and time again. If you listen to Tim, he's very good on his technicals. He called the market on the up move. When it got up to the top, he said he thought it was over with and that we were going to have a good down move, and we have. And as we move forward with the Drake and Capital futures monster thing, and we want to let you know, people are signing up like crazy for that thing, and we're really excited about it. It's going to give people outside the floor an opportunity to look right into what we're talking about, right into what we're seeing. Happy birthday, Isabel. Come on in, Tim.
All right, anyway, all the stuff that's going on with these futures, I really believe is stemming from what's going on in the Treasury sector. Let's face it, you see the bonds, the safe haven, people are coming into that sector like crazy. The 2-year all-time new yields, lows, I mean, it's crazy. So what does that say? It's not boding well for these equities and futures. So let's get to the chase. So far today, the S&P opens up, jockeys for 2 minutes, makes their high, and they hit them for 33 handles. The results saw a bounce of half the day of 47. So if a 50% retracement has seen so far in the regular session, new lows means 50% lower. We'll see the 29 handle today. Top Notch Trading does believe if new lows are going to be made, they're going there. We do have a lead month low though for the year at 35.90, followed by the September year low 31 in the S&P. But I want to talk a little bit about the NASDAQ sector. Back on May 6th, when they had that little blip, I should say a large blip, the big NASDAQ contract only had a low of 68. The mini had a low of 30. That means there's a separation of 38 handles between the big contract and the future contract. That is one of the culprits that I believe is causing more of this erosion into the market. And until the NASDAQ future sees 30 even, 1730 even, I believe the S&P will further erode, and then we'll see an objective on a big fib level right now of 10.0660. We'll see how it unfolds today, and if the S&P does see a bid above 48, we might be able to see a rally up and make new highs. See you tomorrow.